Let's go back to the disclaimer since we are at it here. There we go. NeuroStreet has no interest in the financial outcome of your trades. We are here for products for educational purposes, and there is risk involved with trading. Please understand those risks accordingly. And moving on. All right. So who are we here at NeuroStreet? Well, we're real traders. We're real people, and we have real results. As a fellow trader, I could tell you I understand the struggles that come with trading. Many of you are in a position just based on sheer numbers of how things go and how these events are. Whenever we do a poll on how traders are doing, typically about 90% in this session are not making money actively, not generating income in trading. And that's a problem. And frankly, that's why we're here, is to help traders become winning traders, to help traders become consistent traders. And I can tell you that it is absolutely possible. It's not easy. We're not going to tell you that it is. We're not going to give you false hopes. Trading is hard, but here's the deal. NeuroStreet and our education and our tools have helped me become a consistently profitable trader, and we can help you too. So if you can follow our approach and learn the tools and learn the strategies, you can be successful in your trading as well, which I'm sure is what everybody's after here. All right. If you're all with me, give me a quick yes. We'll get some interaction from the audience. Always makes things a little bit more enjoyable as we go through these events. So I appreciate your participation and for being here, and thanks so much. So awesome. Let's go into order flow. What the heck is order flow? Well, it's the flow of orders coming into the market, is the simple way to put it. And really what that means is who's buying, who's selling, and where is it happening. So what we're doing here is we're taking all these candles, and we've got open, high, low, close, is the extent of our knowledge of what's going on inside each candle just by looking at it. We know, is it open, high, low, close? That's all we get. We're not really getting much data to understand, well, okay, if we look at a particular candle, are there more buyers or more sellers? Or like here, did the buyers step in here? Did they step in here? Are sellers still trying to get on board? Is this thing going to go down? Is it going to go up? Like, we don't know what's going on. We just see the candle. It's just really just showing us price action. And what I can tell you is that obviously inventory is going to lead the auction. So let's back up here for a second. What is inventory? So inventory is the orders that are pending, okay? Orders that are pending are going to be inventory. Pending orders. Okay, so when you see the order, the pending orders, and you see the inventory, most of you would be familiar with looking at it on a dome, which would look like this. You would see the inventory typically on the right and the left. You'd see, people trying to get in the market to buy would be down here and sellers here. And those are the limit orders that are placed, that are waiting. They're waiting for the market to come to their price so that they can get into the market. So most of you are familiar with looking at it that way. You can also see it on the chart. You can have this on the chart. You do have to have level 2 data. Okay? You do have to have level 2 data to see this on your chart. Otherwise, you're not going to have the inventory. It's a data subscription for Ninja. But what we have here, we could see that at this particular price, we have 182 contracts waiting as limit orders to buy. And that's what's happening at that price. And then if we come up here, we can see we got 94 contracts waiting to sell at that price. So that is the inventory. That is orders that are being put in. That's like you go to offer up and you put a bicycle up for sale. That's inventory. Okay. Well, inventory leads the auction. So what is the auction? Auction is, and really the order flow for that matter, is executed contracts. So order flow, we go from inventory to print. Print is now the order flow. Inventory is not order flow. Inventory is inventory. You can look at it as an order flow concept, that's fine. But print, the orders are not orders until they're printed, plain and simple. because just because you've got 20 orders here, if this market goes up, buyers, these 20 contracts may move to here. So this is not a final deal. It hasn't happened yet. It's not executed. So therefore it is not an order. So obviously this is more important than the inventory. And I won't say that inventory is not important, because it absolutely is, but print is going to be a better, better way to decipher what's actually happening. Okay. So we have our DOME, which stands for, anybody know what DOME stands for? Just see if just have somebody get involved here and keep some audience participation. What does DOME stand for? Depth of market. Yeah, exactly. So depth of market. So this, again, inventory, how many contracts are available at which price. Okay. Then what we have here, and number 2 is going to be the print. This is the print. Anybody trade with print that looks like this on their chart? Anybody trading with this on their chart or on their workspace? Just curious if anybody's using this. The thing is, so what's happening here is this is telling us how many contracts were bought or sold or executed, for that matter, at a specific price. And so, hint, in order to execute a contract, you need a buyer and a seller. Okay, so all this is telling us is that 3 contracts were executed, 1 contract, 1 contract, 1 contract. This is telling us at 251.39, this is what happened in that 1 second of trading. It's a lot going on. And then at the next second, we can see the orders coming in and so on. You can see the difference of, here. Here's something that's interesting that stands out though, right? We've got 22 contracts that were executed at the same time at 250.44, which realistically, all of these contracts were executed at 250.44. Now, looking at this, odds are, correct me if I'm wrong, odds are the first thing that you looked at when you looked at this was probably not that all of these contracts were executed at the same price. That's probably not what your eyes saw when you're looking at the print. You probably saw this 22 contracts. You probably saw this same price, 2, 1, 2, 3, 4, 5. Your eyes are geared toward other places. So when you look at it on a chart, it becomes easier to tell what is actually happening, because at this time, all of this data shifts over to the chart. So now instead of having to read this as print over here, we can read it on the chart and we can see exactly where the contracts were executed. The better part is we could see how many contracts were bought and sold at a specific price as well. And that becomes a huge opportunity for us as traders to see what's going on inside the print. The print will tell a story. The print is what determines ultimately what's going on in the price action, what's happening inside the orders. Okay, so when we look at this, we can see buyers, sellers all across, and you could see it across all of the candles. Okay, so that's the process of inventory to print. Then we bring in additional concepts, which obviously even looking at just this is kind of, it's kind of hard to really make heads or tails of what's really going on, right? We could see this and we could see, okay, well, yeah, there's 177 contracts, 255, 519. But like, what does that mean? We've got 259 here and 516. What does all this mean? So at the top here, we could see 116, and I think we have on another slide, we're going to go over the net delta. And so we'll certainly cover that if not. So let's go into bid-ask tape aggression. Okay, so now this is where we're taking the concept of seeing what's going on inside the print and inside the candles, and now we're actually adding signals to that data. we're making it easier for our eyes to adjust from having to see this 22 here to now we can see it on the actual candle. It's going to be a lot easier for us to see what's going on, because in the real time and the everything being hectic and chaotic when you're trying to trade, you need to be able to see things that are clear, easy, and easy to see. Okay, so tape aggression is going to be the study of orders stacked at the bid or the ask. When order flow is aggressive on one side of the market, we need to see this in the chart. So there's ask aggression and bid aggression. Ask aggression is buyers aggressively going to the asking price. So if we go back again to our dome, just because that makes it easier to see, what this is telling us is, let's say you're a buyer and you've got 20 contracts sitting here. This is where you want to get into the price. And the sellers, the current price is here, but the next sellers to get 20 contracts aren't until up here. What this is saying is that if you get in as a market order, it's going to find the next available price and it's going to get in the market. So as a buyer, you're not buying down here, you're buying up here. You're getting less of an ideal price. So if you're going to get in aggressively at a higher price because you cannot wait to get filled, and you're almost certain that sellers are not going to bring the market down to come and get you, or you get what I'm saying here. But you have the idea that price is not going to come down and get you, so you just got to get in, and you're going to get in at a higher price because you still think it's going to go up higher. Okay, so that would be aggressive buying because you're not waiting to get into the order. Okay, so that's exactly what's happening, is buyers are going to the ask price or higher, depending on how many contracts you've got to execute. And on the bid side, sellers are aggressively going to the bid price. Think of it as, man, the market's breaking out the highs. I got to get in. I'm not waiting. I'm hitting market order. Get me into this market because this thing's about to jump and I want in. That's what's happening. And so what happens on the chart then is we get these dots in here that print for us. And this is going to tell us when the sellers are getting aggressive and they are coming down to the bids, they're coming down to get into the market. This is aggressive selling, which can all be seen right here. It can be seen right here, and it can be seen right here. This is telling us there's aggressive market activity, which is obviously something that's beneficial to know. But we don't want to know if, okay, sellers got aggressive at this one price and then they got aggressive here. We want to see them stacked together like this. Anytime we see stacked aggression, this is telling us market's moving, and odds are they're probably taking out stops. Just saying, probably. Or they're just stop orders for that matter. People are just jumping in on market orders versus limit orders. That's what it's telling us. Okay, does that all make sense so far? Everybody doing okay? If you have questions, ask away. We can always stop. I want to make sure we drive some of these points home. Then we have supply and demand. And what happens is we've taken now these stacked aggressions and we've put zones on the chart. So these are all zones. Anytime there's, you could set it to at least 3 of these or 4 of these, depending on the market you're trading. If you're trading ES, you might use like a 3. If you're trading a NQ, you might put like a 5 because it's not relevant unless you have like 5 or 6 stacked or something. Okay. So, but you could set that. So that's what that's doing. So this is to say that this would be a supply zone, and then you could trade this as resistance, and this would be a demand zone, and you could trade this as support. So that's one type of signal that you'll get with this software, and it's an order flow concept. Let's look at net delta. So we were looking at all the numbers, all on the left and the right. Well, what does that mean? So what we have here is we have sellers on the left here, buyers on the right. It's actually, if we have if we have more on the right, then we'll get positive net delta. Okay, that's what we need to know. So what this is saying is that all the contracts that were sold and all the contracts that were bought, and we're going to take all of these contracts, and we're going to add them up, and then we're going to take all of these contracts, and we're going to add those up. And plain and simple, we're going to take the buyers minus the sellers. If the sellers win, you get a negative number. If the buyers win, you get a positive number. That's all that means. Okay. So in this case, we've got a net delta of 292. Orders at the ask were 869. Orders at the bid were 577. So you got ask minus bid, which is 292. Good. Makes sense. So if we have a positive net delta, the expectation is that the market would go up. Positive net delta, next candle's up. Positive net delta, candle went down. You can see it. It's not like it's a scientific thing. Like, okay, the way you've got negative net delta, it's going to keep going down. No, it's not a foregone conclusion, but it's interesting to know and trade with. I will tell you personally, I do not trade with net delta. I don't really care what net delta is doing. I have found it to be almost irrelevant. That's just me personally, but it does tell a story. I just don't trade with it. Okay, so that's what's happening in net delta. Orders at the ask minus orders at the bid. That's it. Okay, positive equals buying, negative equals selling. And here we can see negative net delta. So we've got 246 at the ask, the 405 at the bid. So we're negative net delta. Cool. Order flow signals. Let's look at some more signals you can get with this. Trap trader, which is exhausted order flow. Delta divergence, which is price delta differentials. You can combine these two signals for a combined signal. That's what this is here. Big money print and block trades. We are going to focus quite a bit on this today. Big money print. And I'll tell you why. Here's when we look at net delta and all these sort of things, like it's good to understand it, but I don't trade with it, because to me, it's not what I'm after. Like, do I want to know as a trader, and you can answer this too, do you want to know what all these little guys are doing with these 15, 25, 42 contracts? Like, do you really care if somebody's selling 40 contracts on ES? You don't, because there's so much volume on ES that 40 contracts is just a drop in the bucket. It's nothing. It's not going to make any ripples. It's not going to make any waves. I want to see where is the big money stepping in when we have things like 200 contracts coming in at a certain price. Something that stands out like this 519. That is the biggest one on this chart. Now, if you're looking at this, you're not seeing 519. You're seeing all these numbers, wondering what's going on. So we need this to stand out. And that's what these things are for. So let's go check them out. Does that make sense? Like, I don't care what the small money's doing. I want to know what the big money's doing, because those are the ones that are making money. And I want to follow what they're doing, right? So let's look at trap trader. Trap trader simply means orders getting exhausted at one end or the other. If you're on a if you're in a bearish candle with a higher high, and you've got these orders coming in, and you can see what happens here. The orders are dropping as we get higher. 351, 349, 315, 274, and 66. Let's look at this side. 13, 12, 11. Well, that's descending as well. 41, 4, 1. The only reason this one didn't show a signal here is because it's not at the lows. Okay, so that's what trap trader is saying, that as we got higher, there's no more buyers. So the buyers are exhausted. They're saying, nope, not buying that high. It's too expensive. Just like if you go to, check out a couple, 2, 3 stores, you're looking for, lately I've had my eye on like different grills with smokers, and they're kind of all in one, right? Because I got a grill and I got a charcoal grill and I got a smoker and I got all these things, which is why I look the way that I do. Clearly, I like to cook. So, I've got all these things on my patio, and I'm like, yeah, I don't want all these things. I just want one that does everything, right? So I, check a few different stores, look for different prices. I'm going to shop for the best deal. It's the same thing here. Buyers are looking for a better deal. They're saying it's too expensive. Bring the price down, and we'll do business. Okay. Simple supply and demand rules. So that's trap trader. Delta divergence means price went up with negative net delta on a bearish candle. Price went down on a positive net delta and a bullish candle. Personally, I would never use delta divergence or trap trader by themselves. I would use them as a combined signal. Use them together if you're using these signals. Again, it's just my point of view. So here are the combined signals. So now we have a higher high in price with a bearish candle, negative net delta, and buyers getting exhausted at the highs. That tells a story, does it not? Price went down. We have positive net delta on a positive candle, and we have sellers exhausted at the lows. Now I'm interested. Now I've got something I can work with. Stack things together, and it gets to be a better situation. Please excuse me. You might see a chart here for a second. I have had this trade on all day, and I'm going to move my stop to break even. Normally, I do not trade during the events. I'm just testing sim on the AT trader. So my apologies there. And we're back. I'm not really watching what's going on. I just see that the price is coming back, and I want to just make sure my stop's set to even. All right. Where were we? So if we're looking at combined trap trader delta divergence, that's the way to go, personally. Okay. Big money print. This is the one that I really want to focus in on. Big money print is where it's at. This tells a way better story. Having traded with all these signals, I've traded with every one of them. I've owned this tool for years, and having traded with everything, this is the best. Okay. So if you learn nothing else from this event, big money print is the way to go. Trap trader, delta divergence, net deltas, bid-ask aggression. Bid-ask aggression is good. It is good. I do use that. The rest of it, I'm not crazy about it. It didn't do much for me. Okay. Big money is where it's at, because this is standing out like a sore thumb. Like we saw in that chart where we had that, 500 and 400, and everything else is like 10 to 50. This is a huge difference. This is telling us that something big is happening at that price. Hint, it is especially ideal when the market comes into a level. Let's say this is your area of interest. Market comes into that level, and big money's here and here and here and here and here and here. There's all this big money coming in, and then the reaction is the market drops. That is a confirmation of what you are expecting to happen as a trader, and an awfully good reason to take the trade. And we'll look at it. I'm going to actually show you a trading strategy that you can trade tomorrow, and you can actually make money with it, because I've traded with it and I've made money with it, and it's consistent. So I'm going to show you a real strategy using order flow. Cool. But big money, what this is saying is that the contracts that are executed at a specific price are much higher than the average. Let's say here the average is 34. In this case, the average ask is 113. The average bid is 114. And it's going to look back 20 bars to identify these averages. Okay, so these are our averages. It's going to go back 20 bars. And then what happens is any bid or ask that is at least 2.5 times that size, it's going to print big money print. Now, in this case, you could see it must have, these numbers must be different from what's on the chart because they don't match up. In this case, we're getting big money print at 35. So I don't know what's up at this chart. But anyway, the idea is that these orders that are being executed at these prices are at least 2.5 times larger. Oops. 2.5 times larger than the average bid or ask. So that tells a story. That is something that we need to know. It's something important. Block trades. What are block trades? Let's go back. Let me just view my slides so I don't have to scroll all over the place and make you all busy. Let's see here. Okay, let's go back here. You remember our little guy right here, 22 contracts. Stands out like a sore thumb. Let's say the average contract sold is like 5. The average order is like 5 contracts. If you get a 22, that's meaningful. That is larger than, quite a bit larger than the average order. So now we're not looking at, where's my slides? Here we go. We're not looking at just the number of contracts bought or sold at that price. We're actually looking at the order that was placed, which is important. Where are we at here? There we go. So if the average order here is 4, we need it to be the top 1 percentile of orders. This means that the order being placed is larger than 99% of the other orders. And this would mean that we have a large order being placed at that price. A large order here, a large order here. Why would that be important? Because we all want to trade with the banks and institutional traders. We all want to trade with big money. So if there are traders putting on huge orders down here, and the reaction is the market leaves that price, then we have a confirmation that something is happening down here and they lifted the market. It's enough, you could say, well, yeah, we could see that in the price action. Well, of course we can, but now it's confirmed. How many times have you seen price action do this and then they slam it down and take out your stop? I know you've all seen it because all of us have. That's the point. We get the confirmation to show us that the trade is going to hold and that we've got good confirmation of our sentiment. Then we get to micro and macro volume profiles. I'm not going to go real deep into that. Simply put, it's a big profile or a small profile. I mean, really, that's what it is. Macro profile would be our daily profile, which all of us are pretty much familiar with at this point. If you're not, that's okay. Go into the members area and watch the section on volume profiles. But we have several different volume profiles that you can use with Print Profiler. You've got manual profiles, developing, or regular profiles, which is like composite, which looks like this. Okay. And then this software is huge, by the way, so that's why there's so many different things packed into it. It's massive. Volume cluster analysis, patterns, and divergence. Okay, so we're going to kind of fly through some of this. And so we have our day composite. So this is our daily. This would be our macro profile. And this would be our micro profiles, which is kind of a composite. This would be based on time. So, and this is a good point. Most of us are familiar with looking at either daily, weekly, or monthly profiles, right? But we can actually look at the profile of a 30-minute bar just by splitting it into our chart. And now we've got a 30-minute profile. And I will add that anytime you see this, you're looking for a pullback to VWAP. That's a free tip. So that could be very helpful in your trading too, to get a closer look at the profile on a time basis versus the daily. Then we have developing profile, and this just tells you what's going on in the profile based on that time, and it just moves with the time. So you could see where the VWAP is actually moving. You could see that the point of control has shifted to the highs and it keeps moving around here. And that's important to know. If I'm not going to go into the details of what a volume profile components are. So again, if you need more info on that, please check out the lessons on those. Just for the sake of time, I want to make sure we're getting to the meat and potatoes here. And then you can do manual profiles. where you can draw and say, I want to know what is the profile from this point up to here, and what was that profile. And I do use that every day in my trading. Literally use it probably every day. So very important to know. And then we have bar volume profile. So this has now taken the daily profile. It has taken the time-based profile, and it has brought it down even further to the bar, whatever bar size you are on. So you could trade, this could be a 1 minute chart, and you can have a profile every minute in that chart. Every bar has its own profile. So this is telling you where's the cluster of volume, which is the 3 largest ticks that were conducted in that particular time or in that particular candle. Then we've got point of control for each bar. You can see that's in yellow. I'm sorry, my pen is blue to make it super confusing on you. And then we have value area high, value area low. In this case would be at the point of control. Value area high, value area low, point of control, VWAP. Okay. Then we've got, let's look at another one. So we got high, low, VWAP, point of control. Every bar has a profile. So you could do that in print profiling. Then we get cluster reversals. So if the cluster's coming up and then coming down, it starts here, goes up, and then comes down. These are different patterns that you can get as well. There's a really good session that we did as a product training on this particular product. For the sake of time, I'm going to keep moving forward here. But if you want to go deeper with this software and learn more about it, if this is something that's intriguing to you or of interest, and you're like, oh, this is really pretty cool, I want to go learn more, go into the product training that we did with Print Profiler, because it goes through everything, all of this stuff, and more in depth. Cool. But we do have 2 bar, 3 bar patterns, and you can see them on the chart. They do print as signals. That can be helpful. I would probably suggest using this on like higher time frame charts than smaller, but those are available. And then volume divergence, and I'll go over this one last, and then we'll start digging into the strategy here. And Peter's asking what size stops and profits. I will show you. Yeah, we'll show you on the chart. Okay. So this, which by the way, this is a volume cluster reversal, because we get down, up, and then down. Anyway, doesn't matter. But volume divergence means your volume clusters at the high of the bar, and you get a bearish candle close. Clusters at the low, you get a bullish close. Clusters at the low, you get a bullish close. These are good signals. I've traded with these before and done pretty well with them, actually. Excuse me. So these are good signals too. Volume divergence, that's what it means. Your volume is at the highs, but you got a lower close on the bar. Why would that be important? Because if all the volume happened here, then big money stepped in at the highs and they reversed the market, and then bringing it back down. So this means if you're seeing this, there's a good opportunity to trade in here. And that's exactly what happens. They come back to test that level and they drop. What about the volume that's down here? I know we're not getting a signal because the market opened there, or this candle opened there, but look what happens. Next bar, they test it. And then we get a volume divergence here. Next bar, they test it and lift. We get volume divergence here. Next bar, they test it and lift. Volume divergence here. They get almost to the bar and they lift it. Good signals. It's definitely a scalping type of situation there. You're not looking for big targets with these, but you could absolutely trade with them. But that's not what we're going to go over today. Let's go over heat map. This is important to know too. Okay, so we're going to take big money and heat map, and we're going to use this to our advantage in trading. What delta is important? When is it needed? When is it strong or weak? When do we use it for entry? These are the things that we want to know. We were talking about, like, we're seeing net delta all over the chart, and it tells a story, but it's not something I'm really interested in. Just the same as if we have, you know, a bunch of 10 tick orders, you know, that sort of thing, and then we get one for 50. Well, that's something I would want to know. We only want to know the most important info, because That's what we need to pay attention to, is the anomalies, things that are standing out. And that's what heat map helps us do. So what this is saying is that we have here the volume, which is showing as these, bars at the bottom. This is what a heat map is. So we can see these bars. If we have dark green on the heat map, this means we have larger than average net delta. So in this case, we have 539 is the net delta, and that was very strong at that time. And so we've got a dark green color. Here we could see it again, 499, we've got dark green. 485, that's strong, we've got dark green. 538, strong. Little weak, starting to go down. Next thing we know, we get strong negative net delta here. And what happens? Market goes down. Because the buyers lost their steam, they met aggressive selling here, and they brought it down. That's the story. That's what's happening inside these orders. So we've got strong net delta here, strong net delta here, 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 here. Any of these where they're dark green or dark red, that's strong net delta, okay? But what about these that are standing out higher? What does that mean? So let's go to the next slide here. Next, we have volume heat map. So this is the height of the volume is telling us how much volume occurred at that bar. When you combine it with the strength of the delta, now we can light up the heat map. Because when we combine those two factors together, that's what's important to know. So simply put, anything that is above this line is larger than average volume. And you notice not all of them are dark green or dark red. You could see this, they came into this area, put in a bunch of chop. This is telling us that because that is neutral, there's a lot of buying and selling going on. There's a battle over price right there. Again, it's telling us a story. Now you can see how we're able to put that story together. Excuse me one second. Is this all making sense? Is it starting to come together? This is like a crash course in order flow. And I'm sorry that you had to deal with 40 minutes of order flow in one lesson. Because realistically, we could probably spend 3 hours going through this stuff. But for the sake of the webinar, we're just going to highlight it. Again, if you want to see more detail, check out the training event. All right, so delta spread analysis simply is looking at this heat map, but putting it into a candle. Okay, so this heat map here, what happens is the candle turns bright green. Why is that a benefit? Well, you don't have to look down. You can just look at the candle and you can tell we have greater than average volume and greater than average net delta. It's on the bars, makes our life a lot easier. Okay. You guys want to check out a trading strategy? You guys ready to go check out some trading? Let me actually just escape that for now, and let's just bring up some charts. And I'm going to show you how we can actually trade with this. Cool. All right, so here is a chart of RTY, good old Russellmania. Cool. All right, so here's our chart on Russell. Let's go back to 10 a.m. And we're going to show some signals, and we're going to look at them, and it's going to be great. Let me just break down what we've got going on in the chart first. So we have here, we've got our candles, obviously, candlestick chart. We are using a full range chart, 15 ticks. Okay, 15 ticks, this is RTY. And this here is a 20 EMA, just to get a reference on the move of the markets, 20 EMA. This is our infamous VML system. And then the points and these lines are the waves. Okay, it's waves. Do you need to know all the settings on waves and VML? No. If you want the workspace, I'll give it to you. Just send me an email and I'll send you the workspace. So you can use this same exact workspace. You don't have to set anything up. It's already done for you. Cool. So we've got waves and VML. Well, what do you need to know about print profiler as far as that goes? So there's our print profiler. Let's go ahead and zoom in here into the bars, and I'm going to show you what's happening here. All right, let's take a look at this candle here. We can all see that this candle is a brighter red than this candle. This means we have heat map lighting up on this particular candle. Again, that means we have greater than average volume, greater than average net delta, or in this case, more negative than average. And then we have a couple of the pink flags and a couple of the green flags. That is big money. That's our big money print. Remember, we said that's what we're looking for. Greater than average activity at a specific price. And we have greater than average volume on that candle. And we have greater than average net delta on that candle. So this is all telling us a story. And then we see these little dots here. And this is telling us where the bids and asks are getting aggressive. Now, here's a fun fact. The bidding was aggressive here. Buyers were getting aggressive here, but they ran out of steam. And then the sellers jumped in and they got aggressive. This is telling us that plain and simple, the market's coming down. Sellers don't want to wait to come back up to get filled. They're just going to take the order and just get in. That's what that's telling us. Okay, so now we've put that story together of what's happening inside the candle. We've got aggressive buying, we've got aggressive selling, we've got greater than average sales and greater than average bids in the same bar. So what does that mean when you've got them lining up like this? It's absorption. Absorption alone, bid-ask aggression alone, heat map alone is worthless. It doesn't mean anything. Well, then why the hell are we trading with it? Because it's the reaction that we're looking for. What happens after big money? What happens after the heat map steps up with greater than average net delta and greater than average volume? What happens after we get the bid-ask aggression? That's what we want to know. It's not the signal that matters. It's the reaction. That's how you trade with order flow. Okay, so what's happening here is we've got big money at the lows. The volume clusters at the low. We had aggressive selling at the lows. Then the price bar went up. Then we got aggressive buying. And they weren't able to take out the lows. You don't have to be a rocket scientist to figure out that the bias is shifting to the long side there. It's pretty easy to see it because we could see inside the bar and we could see the story that they're trying to tell us. Does that make sense? Everybody with me there? Anybody lost? Good. Got a smart bunch, a lot of smart traders. Who can tell me what I just drew down at the bottom of the chart there? What's happening with the lows of price and the momentum? What's going on there? What's happening? Somebody chime in. And we haven't had any interaction from you guys in a while. Just make sure everybody's still awake with me. I haven't bored you to tears yet. Come on, somebody chime in. Somebody. Give me something. Nothing? Yes. Thank you. Somebody chime in. Thank you. We've got divergence. Lower low into another lower low. A lower in momentum followed by a higher low in momentum. So we've got clear divergence. Oh, well, now this just got interesting. Got a lower low in price into divergence. We've got big selling coming into the lows. They get exhausted. The bid or the aggression on the selling side has fizzled out. We put in a low. Buyers are starting to get active. We get big money stepping into the market, and buyers are jumping on board. That's our reversal signal right there. Time to get long. Now, we're not looking to take a ton out of the market, but this would be a trade I would take right here. Stop goes below the low, couple ticks. There you go. Oh, by the way, we hit 3 targets. So that's 0.5 to 1, 1 to 1, and 1.5 to 1. Good stuff. Let's go look at some more. And I'll break down the rules for you. I just want to show you the signals first. Let me zoom out so we can find our divergence. What about this here? We've got divergence here, but we don't get any signals here. We've got divergence here, but we've got signals going into the high. Well, that's interesting. We don't get a signal on the low, on the bearish candle, but we got signals on the bullish candle. So this means that we had big money at the highs, because we're still at the highs. Big money steps in at the highs. Buyers get exhausted at the high. We've got greater than average volume and greater than average net delta, but the net delta is actually buying, not selling. And then the market goes down anyway. Okay, something worth noting. So the next question we ask is, do we have divergence? Yes, we do. Because we haven't hit the highs on momentum, but we're hitting higher highs in price. There's your reversal. Bam. Now, I'll just go on the record and say I actually would not take this trade. It's just not enough for me. I want to see the heat map or something else lighten up, so I wouldn't trade it. But it does work. All right, let's keep going. Let's look for more. Do we have any signals down here at the lows? No. We do have divergence, but we don't have any signals at the low. Let's find another signal, and then we'll plot out the rules for you guys. Chop, chop, chop. Break the lows. Lower low. Momentum shifts, but we don't have a signal here. Nothing to trade. Lots of activity here. Lots of activity here. Let's zoom in here. Okay, we're coming into a level that I've already plotted on my chart. And we've got big money, big money, big money, aggressive selling, and then they stop and they catch aggressive buying. Do we have divergence? Yeah, a little bit. We're just starting to get it. To me, I'm not interested yet. I want an extra confirmation that something's going to happen. And there we go. There it is. And I'm just waiting for them to bring it. Test the lows again. Give me more divergence. Give me more signal. Give me aggressive buying, aggressive, activity in the bids. Big money at the lows. Love everything about it. That's the trade right here. Stop's going to go below the low. Couple ticks. We catch target 1 and target 2, and we get stopped out at break even. Okay, so you would have caught a 1-to-1 trade on that. Most of these trades are going to work out at least at a 1-to-1. Cool. Let's go find another one. And let me plot the rules on this particular one. I think I had this one pre-mapped out. Okay. Here we go. What is this from? Oh, this is actually something else I must have plotted out. That's interesting. All right, let's go look at this anyway. All right, so we're putting in a lower low here. Let's zoom in so we can see what's going on. We've got lows in momentum, and then momentum starts to shift back to the upside. Then we've got lower lows in price. So we do have divergence here. Then we get a signal with the heat map lighting up, big money on both sides at the low. There's your trade. It would be, you go a couple ticks past. What do I have this set at? That's why. I got the wrong tick size. That's why. I was looking at another market with a different tick size. We'll go back and check it out. I'll show you. RTY, I like to trade at a 15 tick. But you can see the 10 tick works fine too. I mean, whatever knocks you out, I guess. Whatever makes you happy. Yeah, this is better. Yeah, that's more like it. I like to trade RTY at a 15. So here's our divergence right there. Lower low in price, higher low in momentum. And you can see it here too. This is why that other line was there. Pretty clear to see divergence there. Okay. So we've got divergence. Oops, sorry. We've got big money, both sides, aggressive selling going into the lows. Big money shifts the market. Heat map lights up. Buyers are stepping in. Let's go get on board. Give me 3 targets. We would have gotten 2 because it would have hit target 1. Target 2 came back, stop out at break even to get 2 targets. Let's plot out the rules for this. Okay. You guys following with me so far? Everybody doing okay so far? Let me mute the mic for a second here. All right, so we got big money on both sides. Heat maps lighting up, lower lows in price, higher lows in momentum. I'm going to put big money both sides at the lows because this would be a buy order. This is a long reversal trade with order flow. Okay, higher lows in momentum. And that's pretty much everything we need right there. So long reversal, we need big money on both sides at the low, which we have. We need a bullish candle close, obviously. Candle close. This is all part of the divergence signal, right? Lower lows in price, higher lows in momentum, bullish candle close, and that's it. Oh, and here's the thing, like if you're taking a reversal, you need the histogram and the BBs to be below 0. So that would be VML confluence down. I'm going to add one other rule. Structure down. And these two, I mean, really, these are just like reversal 101 right here. If it's a reversal trade, your structure is going to be down and your VML is going to be down anyway. Okay. So at what point do we get confluence? We get it right here, right on this candles where confluence kicks in, because histogram has moved down and the BBs are down below 0. That makes sense. So there's our signal. And then we take the trade, stop goes below the low. We're on a 15 range chart. 15 range on RTY. Okay, let's go find another one. Now we're coming into the highs. Oh, let me add another rule. Do not trade out of the red excursion. What does that mean? If your VML histogram is above the red, no reversals. Do not trade out of that situation. There's too much momentum. It'll get you. It'll come and get you. Don't trade out of the red. Wait for it to come back. We get divergence stepping in here. Higher high in price, lower high in momentum. We've got divergence. We've got confluence, obviously, and structure at this point is up. We can see it right there on our waves. We get, in this case, we would need a bearish candle close, which we have. We have big money on both sides, but the heat map is not lighting up. That's okay. That's okay. You want to have at least both sides big money. And I would put like 2 ticks worth at least on each side. If you just get something like this, where there's 1 on this side and 2 on this side or something, that's probably not enough without the heat map. You really want to stack as many of these as you can in your favor. In this case, we've got 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5. So we've got like 11 altogether. So to me, it doesn't matter that the heat map didn't light up on this candle. I'd still take the trade. At least big money both sides times 2 to 3. Or big money one side at least, ideally 2 anyway, and heat map signal. Okay, so there's that one. Let's go find another one. The way that you're going to see these is lower low in price, and do we have divergence? That's the first kind of thing you're looking at as we're coming into the trade. We've got a higher high in momentum, not interested. We've got a higher high in price. Momentum has not yet crept up to our previous level, so that would be divergence. So we've got divergence here. Plot it out. There it is. There it is. And then we've got big money both sides. Heat maps lighting up. We've got a bearish close. Obviously, there's confluence. And this is at a level, by the way, that I've plotted on the chart. Just adds even more confirmation of the trade. And we could take, 17 ticks out of that. Catch all 3 targets. Catch 1, 2, break even on the third, sorry. 1 to 1. And then we're getting to afternoon. You can trade this 10 to noon Eastern time. Easy. Probably trade it more than that, but 10 to noon is the hours I've traded with it. Take a screenshot of this right here. Take a screenshot. I'm going to leave it here. This is like a gift to everyone who's here. Take a screenshot. Let me know when you're done taking screenshots. I'm going to give you a minute to do that, because this has the actual signal. Everything's on the chart. You could see the divergence. You could see all the rules. And we're going to put, this would be short reversal. So let's just go in and change the rules. Short reversal at the highs. And this would just be, higher highs in price. And then a lower high in momentum. And then a bearish candle close. Structure is going to be up, influence is up, and then we're going to go long. Go long. Hail Mary. 5 wide, go deep. I'm just kidding. It's actually a scalp order, so this is probably more like a curls or like a, something like that. Anyway, this is it. Take a screenshot. Let me know when you're done taking a screenshot. And then once I see a few yeses come in, we'll go ahead and move forward, and we'll give you an offer you can't refuse. Money on the table right there. I'm going to show you something really interesting here. Okay, I'm going to assume everybody's got it. So let's go into our profile now. I drew a little tiny little circle right there. You see that? Where's that level? On the other side is low volume. And you could say low volume's kind of here. There's a low volume node. Came down, came back. Where did we test? Low volume. Shocking, isn't it? You mean to tell me that order flow set up at a low volume node like that? I can't believe it. If you want to trade with confirmation, I don't care what you trade. I don't care if you're trading supply and demand levels, if you're trading low volume nodes, if you're trading trend lines. I don't care what you're trading. If you want to use a solid confirmation tool that you should get into a trade, this is it right here. This is it. This is so good, I'm telling you. You can trade with this all day. All right, let's go into the offer. And if you want to hang out and look at more markets, I'm happy to do that. I just want to make sure I get through the rest of it so that if anyone has to run, they can do so, just out of fairness to everybody who's spending time to be here. So let's go over the offer, because I'm going to give you an offer that we have literally never offered before in the history of our company. Now you might say, oh, have you raised your prices? No. We actually brought it down. Okay. This software that I just showed you is available only on NinjaTrader. It's only available on NinjaTrader. It is very intense. You saw how many signals are packed into this thing. That's massive. It's like 20 indicators in one. Huge, huge, huge. Our other software is available on TradeStation, TradingView, Multicharts, MT4. We are on all 5 platforms. Are traders any good? Yeah, we get funded traders, passing combines, getting funded with prop firms. This is kind of becoming a very normal thing around here. A lot of good traders. We've been able to help quite a few traders find their way to consistent profitability and earn funding accounts. You can see I'm one of them. You know, I'm a funded trader too. Trade room. I don't know how many of you are in the trade room or spent time in there. If you haven't, get in there. We are taking winning trades. 77% win rate last year as an average. In our trade room, we're hovering right around that same average this year. Our trade room is solid. The trade room moderator is a very, very, very strong trader. Been doing it a long time. He's one of the best I've seen. It's fantastic. So if you want to take winning trades, go to the trade room. It's open 8:30 to 11:30. I'm going to show you how you can get into the trade room and take those winning trades. Now, this strategy, they are not trading in the trade room. This is something that is an order flow system that I've traded on my own, and it's kind of my own strategy, really. What comes included with a plan? We're talking about the gold plan here with NeuroStreet. You get education, you get on-demand courses, live trade rooms, software and indicators, all included. The print profiler is what we looked at today. I don't know why these got messed up somehow, but print profiler is only one of many, many, many tools that we have available in our gold plan that you can use. All of them are included, and you just pay one price and you get everything. Who is this plan for? We've got a little bit of something for everybody. If you need a really great profile indicator, we've got it. If you want a correlation tool, we've got it. If you want a really great waves, indicator that shows you high and low and structures, we've got it. Momentum, everything. Lessons, if you want to learn something new, different markets, got a little bit of everything. But what about company? Are we supportive? Are we taking care of our traders? We've got a 4.7 rating on Trustpilot, and there's over 500 reviews. So we're doing something right, taking care of traders, helping them find ways to win. Plain and simple, traders do not stick around, and they do not review us if they are not making money trading. That's the short of it. Why would you stay with a company that isn't making money trading? It'd be foolish. So this kind of speaks for itself. What about our community? We have a Discord. We have many Discord threads. We have a Discord server where we've got tons and tons of threads. You can get involved, chat with other traders, and trade strategies and learn more, and just post your winning trades, all that good stuff. Okay. So let's talk about what comes with the gold plan. We've got intro 101 courses, trading education, indicator training, strategy training. This was one of the strategies. There's so many. And if you need strategy ideas, reach out to me. I'll help you put something together. Seriously. Live trade room, 4 days a week, 7 top tier system indicators that we use in our 2 main trading systems that we trade every day in the trade room. Total value, $27,000. Added bonuses, Discord community chat rooms, 44 total indicators on 5 platforms. Are you kidding me? 44. This is one of them. You saw how much this thing can do. Now, granted, this one's probably a bit more intense than some of the other ones, but 44 total indicators on 5 platforms. Trader resources and downloads will give you the workspaces and templates. We'll give you additional trade logs that you can use, all that good stuff. Remote install. We will actually go on your computer and install all of your software for you. We will set up your workspaces for you so that you don't have to do any of it. All you have to do is click to trade and find the trades and trade them and manage your money. Please manage your money. Product training workshops. Those are included as well. I mentioned we did one on the print profiler. Check it out. Total value $42,000. Total value $70,000. You're not going to pay that. I get it. You're looking at go $70,000. Come on. I get it. These indicators used to sell for $750 to $1,500 each. How do I know? Because I paid it. I paid probably $1,400 to buy Print Profiler. And this is no joke. So when we say we have 44 indicators that are valued at $35,000, this is not a made up number. That's a real number. Some of the other stuff, you might say, well, who's going to pay $4,500 for indicator training? A lot of people with other companies, but you don't have to pay that here. Point is, that's not what we're going to do to you. Value $349 a month. Even if we charge $349 a month, that would be a good deal. It really would. But you're not going to pay that. You're going to pay $49 a month. $49 for all that. Who here cannot put together $49 a month to get a full trading business in a box? $49 a month. I'm going to post the link in the chat box here so all of you can get involved. If you're not already subscribed, which I'm sure most of you aren't, here's the link, tradingacademy.com, gold 49. There it is. $49. You get, it's just a month to month. You keep it as long as you want it. It's all good. You can come and go if you have to, no problem. $49 a month gets you access to all of our indicators, our trade room 4 days a week, all of our on-demand education. There's over 100 hours, by the way, all of our product training, and a really great community of traders that you can be a part of. We are making money trading consistently, profitably. We're doing great. Come be a part of it. Come join us. See how we trade. Check it out. What do you got to lose? $49? Less than dinner and a movie. It's less than a night out. Cool. It's less than a tank of gas. The way the gas prices are these days. Less than a tank of gas. Any questions on the plan, on the indicators, anything of that sort? And then we can go in and we'll actually look at, we'll go check out some more trades if you guys want to stick around. I'm happy to go find some more. Any questions? Good? Cool. You guys want to look at some more trades? Kind of go find some more trades on different markets. Anybody want to check out a different market? Just give me a market. We'll go check some out. NQ. I knew somebody was going to say NQ. What is gold 49? That's the gold plan for $49 a month. The gold plan again includes all this. Yeah. Does the price include current webinar? Yes, absolutely. We're recording it. We'll get it to you. We have so much in the way of product training too, Gene. It's every product training that I do, I go over trade strategy because I think it's, you know, learning the tool is great, but settings on an indicator are not going to make you money. And I can almost assure you that nobody really cares what the settings are unless they can make money, right? So, yeah. Cool. Why do so many people like to? Are you trading? Are you scalping NQ? Is everybody here scalping NQ? How many ticks are you looking for on NQ? I'm just curious. Personally, I don't really like scalping on NQ, but we'll go check it out. I think crude's probably a better market. Gold might be a decent one. 10 to 20 ticks. Holy smokes. That's fast. Man, NQ's moving. You're going to get 10 ticks of slippage. Here's the deal. I honestly don't recommend trading this on NQ unless that's the only market you trade. If it's the only market you trade and you've got a killer computer, knock yourself out. If you don't have a huge computer and you're trading multiple instruments, do not try to trade order flow in NQ. Your system will not be able to keep up. It's just too fast. Because bear in mind, you've got like at 1 second, the market may be moving 10 to 20 ticks, right? In 1 second. Now the computer has to put in all of those contracts, all the order flow data, and calculate, is it bid ask aggression? Is it big money? Is it, this or that? What's the heat map? What's the net delta? Your computer's doing all those things at the same time. And if you've got 10 to 20 ticks at the same time versus 2 to 3, then you're just putting additional load on your computer. And you could see, like, just even trying to pull up the signal, the symbol, it's taking forever because I forgot to turn off my my no limit. Bar size, I like 10 tick range on a crude chart. I like 8 on the ES. I like probably 8 on gold these days. It's a little bit choppier. RTY 15, YM 15, NQ probably 20 at least, 20 to 30, somewhere even in there. We'll give it a minute. There it goes. Now it's finally pulling up. But you could see, like, I'm moving my mouse and it ain't going nowhere. And this isn't even like the heat of the day, this is like late afternoon. There's nothing going on. We'll give it a second to catch up, and then I'm going to limit this chart here. I got to change the bar size too. There we go. All right, let's go. Let me go here first. Let's go to a 30. I'm going to start there, and I'm going to bring this down to 2 days. And then we're going to wait again. Good old NQ. There we go. Here's the other problem with NQ. Let's go back to like 10 o'clock. I don't like to trade order flow until after 10 o'clock. When you get to market open, it's like there's just so many orders coming in and tons of activity, and it starts to become irrelevant, Like, here's the other thing with NQ, these bar sizes are huge and it's hard to see the big money setting up. You don't have divergence there. We'll just go through and look. No divergence, there's divergence, no signal. There's divergence, no signal. You can tell I've looked at these like 10 million times. I'm just kind of flying through. I'll find out some signals if I see them. Here's one, but there's no divergence. This is one right here. Let's go check this one out. Okay, so we've got divergence here. Lower low, higher low, much higher low. Big money both sides. In this case, I would say you want at least 3 before it's not even relevant anymore. And then your trade would be something like this, 30 ticks, that sort of thing. If you're looking at a 0.5 to 1, you'd trade maybe 17 ticks, that sort of thing. I don't know that I would go much smaller. I think it's tough. If you're trying to trade less than 30 ticks on NQ, you're going to get stopped out a lot. Like, even if you're right, you're going to take out more stop outs than you need to. Here's one here. We've got lower low in price. momentum. We've got big money both sides. And then there's the trade. So there you go. We'll see if we find any other ones in here. Nope. 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 This one's tough. This is a clean order, but you would have gotten stopped out. Got divergence, a little bit of a lower low end price. But we've got big money on both sides. It looks good. We've got a lot of big money and we got sellers stuck at the bottom there. Good signal, doesn't work. You can't win them all. Nothing there. And that's going to be about it. Check it out and try it on a 20 tick if you really want to go fast on NQ, but I would say the computer's going to have a hard time keeping up though. Let's look at ES and let's change the bar size here. Let's just see if we can do it this way. Nope. Let me move this over so we can have both on the screen moving happily together. All right, let's go change the size down to 8. There we go. And let's go back to 10 o'clock. All right, no divergence. Maybe divergence here. A little bit early to try and take trades on the equities. Do have a little bit of divergence, momentum starting to creep down, and then we get a signal. So that would be an aggressive order, but it works. We're not trading out of the red. No signal there. Borderline signal there, but it's a higher low. Nothing. This one you could take. We've got big money both sides. We've got a test of the lows here in the red, but then it came out of the red. We've got divergence. It's short-lived, it's not like it's massive divergence, but you could get away with one here for 10 ticks. And then, you would have gotten target 1 and 2, break even on the other. Do we got anything in here? This is a tough one. You would have gotten stopped out. It's a clean signal, just doesn't work. Divergence here, but nothing happening. No divergence there. Momentum shifting. There's one here. You would have caught target 1 and 2 and then stopped out on the third. There's another one here. Target 1 and probably stopped out on the other. You probably would have broken. I don't know. It just depends on how you manage your trades. You might have gotten stopped out on that one. This one is interesting to me. This one's interesting. This is a tougher signal. Most traders probably wouldn't trade this one, and that's okay. The histogram shifts here to the upside just barely for a moment in here, but it failed to put in a higher high. It double bottomed, and then it puts in a lower low. And then as soon as it puts in the lower low, it's jumping out of that location. To me, what this is signaling is that they've got aggressive selling going into the lows. Clearly, they're just taking out some stops and they're going to rip the market back up. Like, that's the story that I see looking at this. That's a tougher trade, but it works. Nothing there. We're in the red and we don't have a signal here. Nope, nope, nope. And that's probably going to be about it. That's about it for ES. Let's check out crude. Do one more. These are probably the three best to trade this on. Crude, YM, and RTY. RTY, 15 range. ES and crude, 8 range. Or 10 on crude, rather. Sorry. Give it a second to load here, and then we'll change the bar size. There we go. Bar size. Let's go 10. Anybody trade crude today? Crude has been nasty lately, just all over the place. It's been wild. I took a trade short on crude. It worked out, but it's been nuts lately. Everything going on. Let's go check out crude. I think I plotted some of these out already because this is what I wanted to check out anyway. Divergence here, no signal. Divergence here, and you get big money on both sides. Okay, let's zoom out a little bit. Here's our divergence, there to there. Clear divergence, there to there. And there's a signal, big money both sides. Buyers trapped at the high on the aggressive side. And there's our signal. 2 targets, break even on the third if you put a third on. You can trade this at a 1-to-1. I mean, if you're just, if your stop's at 12, just put a trade on for 12. Up and away. Here's one. Higher high-end price, lower high-end momentum. Big money both sides. Buyers are at the highs. Like it. It's good. What about this one here? Same thing. Divergence. Yes. Big money at the highs, or there's only one big money there. But the other thing I like about this is that there's buyers trapped at the highs. So that means that there's no follow through on the highs. And they were able to, when they got into that area, even in spite of the buying aggression, they still brought the market back down. So that's something that I would trade, actually. It's a decent trade, and then you just, probably 12 ticks on the stop and then just let it run. This one you could trade. It's a more aggressive play because you only have 2 big money and that's it. You don't have heat map or anything else helping you out, but it works. Nothing there. Here's another one. Divergence, higher high, heat map, big money both sides. Yes, please. We've seen quite a few trades. We saw 2 stop outs on ES and none on anything else. Pretty solid. Here's one, but there's no signal at the lows. No signals. Nope. And then we get one here. So we've got lower low in price, higher low in momentum, big money both sides, sellers trapped at the lows, and we have buying aggression coming out of the trade. There it is. There's another win. Not a lot of losing trades on this one. So those of you who like to scalp, this is a good one. We're in the red, not trading out of there. No signal here. Eric, I see you're in here. Do you still trade with big money? Eric's one of our big money traders. Not sure if he's still trading that or not. Yep, there he is. Can always count on Eric to be trading the big money. Eric's been making money with this strategy for quite a while now, haven't you? Yep, every day is a winner. I don't make this stuff up. I'm not that smart. This one's a tougher one, but you would have caught at least 2 targets. There's another one. Big money both sides. Heat map, lighten up, divergence. Clean trade. There's a win. Nothing there. I like those multiple big money in a bar. Yeah, that's the way to go, isn't it? I don't know if you keep your heat map on, but that helps too. If you keep the heat map, my setting on that, by the way, is 8 for the heat map signal sensitivity. I just keep it on an 8. It's just good to see it, you know, and then if you partner it up with the divergence on the momentum, it's clean. It's really clean. And I'm just using range bars on these, but they're solid. So there you go. There's another 2 target. I just trade these at a 1-to-1. You use an MA as a filter, yeah. Just trading longs above the MA, and then shorts below, I assume. Yeah, cool. There you go, everybody. We got somebody in attendance who's actually making money with this thing besides myself. Nothing else really there. And then here's another one. Divergence at the lows, heat map. We've got big money, but only one tick, but we've got our heat map helping us. So that's fine. But yeah, $50 on a webinar and you're profitable as a trader. I wish it was that easy for me, Eric. I wish it was. I unfortunately spent lots more money and more time. That's for sure. Yeah, no kidding. Way better return than stock market, especially right now. Here's one that would have actually would have stopped you out for you know, half of your position would have stopped you out. So there's one loss. You don't see them much though, you know. And then it goes right back to winning. I mean, look at how many signals. I mean, crude's just crazy right now. So obviously we're getting more signals than usual, but there's a lot of signals. Using 9 full range with profile, print profile, new PC processor, unable to keep up, really? Yeah, print profile is awesome, isn't it? Thanks for sharing, Spike. Yeah, it's nuts right now. Just everything's nuts, obviously, but yeah, tons of data, and crude's just been crazy. So there you go. Let's see, how many signals do we get on crude? Let's just go in here and look. Drawing objects. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 signals on, we got 14 signals on the chart here, and there is one loser. Anybody trading 13 out of 14 wins? I'm not even trading that well, I'll be honest. This is a killer strategy. What's the heat map? Yeah, I'll tell you. It's yeah, if you can script it, that'd be awesome. It is, I'll show you the heat map. Let's go to print, turn the heat map on. Here it is. So it's usually, I think the heat map setting is 20 bars look back. I believe it's 20 bars. So what this is saying is that of the last 20 bars, the volume is greater than average and the net delta is greater than average. Now, what kind of factor you put on that, I don't know. I don't know if you put a 2-to-1 greater than average, or you just do above 1-to-1 on the average. I don't know, but it's greater than average net delta and then greater than average volume for that bar. And that lights up the heat map. That's all it is. Inputs, I don't think so. Like I say, the only thing I could think of is if it's like, you know, if it's like, you know, does the average need to be twice the average? Does it need to be 1.5 times the average? I don't know. No, it doesn't show. The only input we have is 8, and I have no idea what that means. Yeah, it's just a signal sensitivity 8. It is pretty easy. I would say, if I were you, Eric, I would start with like a 2-to-1 average and just see from there. Do you need to bring it down? Are you not getting enough signals, too many signals, that sort of thing? And then just fine tune it. And you can always pull up print profiler side by side and try to mimic it somewhat if you really want to. I mean, big money 2.5. Yeah, that's my setting too. Big money 2.5 is a good setting. And what he's referencing there is the 2.5 multiple on big money, which you can set in the system itself. You'd have to go into the indicators and do it, but that means the big money has to be at least 2.5 times the average bid or ask at a certain price. Good stuff. Well, we went long, so thanks for everybody who's hung out with us. NQ's too fast. I don't like it on NQ. There's too much data. Yeah, ES, crude, and RTY are my markets that I really like trading right now. I used to like it on gold, but gold's been so choppy lately. It's been too choppy for me. I haven't traded on gold in a few months, actually. It's been a while. Actually, like November. I don't think I've traded it since November or October. It's been too choppy. So anyway, well, good stuff. Thanks everybody for joining us. If you have questions, reach out to our team. If you want the workspace, reach out to me. I'll send it to you. If you need the notes on the strategy, I'll send you that too. I mean, hey, we're here to help you win as traders. And so, whatever we can do to help you get there, let us know. That's going to be it for now. Have a great rest of the week, what's left of it. And we'll see you all in the trade room on Monday. Have a great weekend, everybody. Cheers.